Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Thursday, July 18, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Well, it's pretty simple stuff. The S&P came down to the area that we discussed last night, which is also classified as the most recent breakout area. The market ran up to this spot, pulled back, ate some time off the clock, was able to then break through or break out above, classifying that as the most recent breakout area. And today they came back to retest the most recent breakout area. It was within pennies, but it's close enough for our purposes here. We know that sometimes they come up short, other times they spike them through. What we don't do is split hairs over pennies. They also came in to the 20-period moving average. It was only 2, 3, 4 days ago that we were discussing, hey, look, they're getting a little bit extended from home base. What generally happens is they will pull back toward home base. They don't have to get there all the time, but toward home base, or go sideways and let home base creep up to price. Well, what happened was they came back in to home base. Funny how that works. Over and over and over again. Let me take a little intermission to cover a couple of things. First, some housekeeping items, then we'll get right back to the S&P. Housekeeping item number 1 is I do have an appointment tomorrow. Jordan will be taking the live room. However, inside the numbers, the pre-market work, the notes, the morning schematic will be there. I do have to leave right around the opening bell, unfortunately. This kind of thing happens once in a while. Jordan will have the room. He's got a good flavor. He'll talk options. He'll talk stuff that he's comfortable talking, VIX, options, spreads, all the complex stuff that I don't have the capacity for. Second housekeeping item on the board. Last night, the title cover of the video plus one of the things we talked about was, wait for it, Russell Top, how do you trade it? We talked specifically last night about how you trade it. Let's jump over there real quick. Stay with me. There's a method to the madness. We talked about a retracement of the tail candle they put in yesterday. Technically speaking, that gives you something to trade against. If they closed above yesterday's high, you would go ahead and close out the position, and you would have had a small yet fast loss situation. Those are the kind we like if we have to have them at all. Well, what happened was they did the retrace. We had the retrace number in the live room. What I said to traders in the live room is, here's the trade. This is more swingish than a day trade. A lot of traders hopped on with IWM puts. This is the hourly chart. That was the first candle of the day, the green candle. That's the one that did the retrace. That's where we shorted it, 224.60. Got paid handsomely already. Case in point, here's my option position that I took along with the live room members. Anything more is trader's choice. Full disclosure, I booked it Dano. Going to give me 40% in a couple of hours. I'm just going to take it off the table. Nothing wrong with holding a trailer. Nothing wrong with holding a portion of the position. That's just what my decision was today. $4,500 in the pocket, more than I started with. I'll take it. Come see what's going on in the live room. You won't be disappointed. Getting back to the S&P. So we still have regular way options expiration week. What does that mean? Well, nothing directly for tomorrow, but don't be surprised tomorrow if they try and goose the tape. You wake up to some kind of a gap higher opening, goose them a little bit overnight. A lot of puts bought this afternoon. They certainly are interested. They, meaning the trick, trap, fool, and frustrate crew. Listen, their job is to make as many traders and investors look like fools as much of the time as possible. Their job is to do exactly that, so they want to issue some pies in the face to the folks that bought put options this afternoon. They've already started that procedure by having a little end-of-day jam session to shake out the Johnny-come-lately put buyers. Where have we ever seen that before? If they are hitting them a little bit tomorrow, this is a number that you'll need to know. Inside the Number members will have this number tomorrow morning posted on the board. If they get below today's low, below 550, the next number down in the sequence of real grave importance, it'll be a give or take, but you might want to put this on a sticky note, 545.65. That will be important if they are hitting them in the morning session. If they open below there, inside the numbers, we'll have the next number and series of numbers down in the sequence, getting ready for tomorrow's activity for wherever they go, whichever way they head. How about inside the numbers? Let's cut right to the chase. We'll highlight a few important things. Let's say they catch a morning rally. The bulls would need to recapture 558.70 for starters to get a real rescue operation going. We'll call that our bull bounce pivot. Need I say more on that one? There's more stuff as the morning grows on, but the bottom line is right from zero dark 30, that was the pivot. They couldn't really get much above, just a touch. We'll get to that in a few minutes. And then they fell back down for the rest of the day. That was the important spot. That was resistance. That proved true. We had a flip side, or bearish tape, has price getting below 556.70. That opens the door for another leg down. Fair enough. There it is, the blue horizontal line, 556.70. They came into it, they spiked it, they tried to find support, but they did give it up. That was some support. It wasn't good enough to get them back to the pivot. They did bounce it. We did have some traders that scalped that area, just like we had some traders that were short up in this area. If you're trading the S&P during the trading day, do you have the numbers? What are you using for support and resistance? How do you get your targets? What do you use for stop losses? Might want to come over and check out inside the numbers, the live room. We're providing traders an environment to be successful. Pause the video, read the notes, go back to the chart, and double check the work. Now you'll notice here the next support down from what we just discussed is 555.25 down to 554.11. Now that zone turned out to be suspect early in the morning. They went through it. They tried to fight it a little bit, went lower. They did fight back into that zone, but then gave it up later in the afternoon. So they did not really bounce from the first touch of this zone. That's what my expectation was. That's what some traders in the room were expecting. That turned out to be a little bit of a tougher situation for those traders trying to pick this off long here on what we had at the time was a potential spike the low and rip it back in the other direction. That did not happen, so that's what I proposed in the live room, but that particular trade proved incorrect. I'm going to get most of them right. I'm not going to get all of them right. That's just the way it works. Most is good enough to make a lot of money. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here, everything you need to trade in the S&P, whether it's the vehicles like the futures, the exchange-traded products, options on the S&P, options on the exchange-traded products, any of the above, it doesn't matter. 1150, they're getting hit pretty good. Below 52.10, 552.10. Door opens for the next number. Then we have 550.28 to 550. That was basically within pennies of the area that was the most recent breakout area discussed yesterday and discussed again in the front part of this video. We will issue that one a funny how that works. We only had two stock on the move opportunities this morning in the pre-market, FL and CPRT. Neither of them hit their entry objectives, so they're off the board. Earnings season will really come fast and furious into next week. I believe we have Netflix today after the bell, so maybe get some action tomorrow in Netflix and others. We'll see. Already a little action happening in Netflix. We don't know where it's going to wind up the post-market or the aftermarket. We don't know where it's going to be when we open the bell tomorrow or they open the bell. But we will have numbers if they're moving them in the morning. It'll make the list if it's available. getting back to camp IWM. So what they did today at the end of the day was they got below and stayed below the last breakup candle low in the sequence. Below that is no man's land, opens the door for the gap. They filled the gap, and that's where they bounced it from an intraday perspective. They were down about 2% today. Spiders finished down about 0.75%. Tranny's down about 1.7%. So my two favorite market leading indicators were once again leading the tape, in this case, leading on the downside. Let me just offer something to think about in terms of the folks that are short the IWM from this morning saying, hey, I took profit today. That was garden variety. That was obvious. But where's the next profit? Where's the next target? Let's talk target for a minute. Something logical. What if I took this low down here and I did a fib retracement from this low to the recent high? You could see they've already achieved a 25 or 30% retracement, and you could see what happens next. And if I slide this over, you could see that the 382, and I just had this flip for some reason before. However, I fixed it. 382 is at around 215.5, give or take pennies on either side. That would be another target, a 50% retracement at 212. And then all of a sudden you come over here and you say, well, look at this. Here's one of these breakout areas. This one counts, happens to be coinciding with a 50% retracement from recent low, important low to recent high. So 212, 212.5, 212.25, 211.75, 211.50, somewhere in there is a really, really good area for a target and an exit. Doesn't mean they won't bounce first, but this is the way it works when doing the analysis on how to derive targets. That's just one of them. That's not the first target, and it may not be the final target, but that is target-ish. Write that down for the folks that are in the IWM short, either from the video we discussed last night when we said you can sell a retrace, or from the live room today when we did sell the retrace. What about the folks down at the transportation department? Right back inside this trend line situation, we have to abide by the weekly chart for this one. If they can't close a week above, then it's not a breakout situation. It was just a test. My second favorite market leading indicator down 284 or 5 points today, 1.77%. It's a pretty good down day. My favorite canary in the coal mine. However, what's this chart telling us now? Well, we really don't know. They're beating on the top end of the trend line. Can they break out? Yeah, they can. But if the other markets are not going to be going up, then it's unlikely this will be breaking out. Can the other markets bounce right back up? Absolutely they can. Can the spiders bounce up from the 550 number that they hit today, give or take? Absolutely they can. Spike into the 20-period moving average, bounce off of it. Certainly that can happen. Think about the big picture here, a weekly chart. They're above all the moving averages. Forget these trend lines. Just look at the chart without anything except the moving averages. They're above all the moving averages, so what? So the trend is your friend. Daily chart, well above all the moving averages. What are they doing now? They're coming back toward home base. That's it. Nothing more, nothing less. Pretty sure that was a number we discussed last night in the Qs. It's still on the chart. We'll give that a funny how that works. The weekly close tomorrow, Friday's close, will be important. Above all the moving averages, trend is your friend. That's fine. They're below the 20 on the daily chart. However, well above it on the weekly chart, working off some of the quote-unquote, air quotes, overbought condition. What do we have? We have a breakup candle low. That number is what? 476.26. Any accidents or coincidences? Absolutely not. What was low of day today? 476.27. See how that works? The way I'm going to use that into the weekly closes, where do they close the week? Do they close above or below the last big time breakup candle low in the sequence on the weekly chart? That is the same 476.26, pardon me. Closing below will be bearish. Closing above will be they have run a test. And that may be, we don't know until next week, but that may be all they're going to do. Finally had a down day today in the financials. Pretty good volume. Made a new high. Finished near the low. Reversal day. on volume, outside day, high of today and low of today, including close, was below yesterday's low and the high of day was above yesterday's high. That's an outside day. That qualifies as one of those signs and or signals, reversal-ish, of a trend change situation. Weekly chart well above all the moving averages. Trend is your friend. Can they come back to the most recent breakout area right over here somewhere? Absolutely they can. There is nothing wrong with that. In fact, that is normal garden variety market behavior. You should expect that to happen. It's a matter of how and when. Smash mouth Philadelphia Semiconductor Index came into the 50-period moving average, spiked it, didn't go and fill this gap down here, but rallied off of it just a little bit. Finished in the green. Could be a tell, maybe a positive sign for the tech sector as a whole. Maybe there was enough of a short-term washout in the SMH, the semi space. Regular way options expiration week. Weird stuff happens, including, but not limited to, shakeout operations. Check in on a couple of other things. Amazon, we talked about this trend line already. You could see today that deemed important. So below this trend line opens the door for a leg lower, namely down to 178.30. Write that down, put it on a sticky note. Above this trend line, and they will have simply held the trend line. Apple's into an important spot. You have a breakup candle low here, a 20-period moving average here, and the most recent breakout area right here. Anybody think those three things put together in the general same spot is important? Also a semi fat round number at 220, give or take. It's an important spot. Start getting below 220. There's another leg down in Apple. Apple on its way back down to test the area/vicinity of the most recent breakout area. Funny how that works. Microsoft, 443.60, most recent breakout area, came within pennies / a stone's throw of that today. See how all charts act and react the same way? Google, a little bit different, below the 50-period moving average. They don't have to get there, but a number important down below is 172.50. Might want to put that one on a sticky note. Nvidia hovering above its 50-day moving average. If this is a fake out and they have to come and go through it and touch it and all that stuff, 112.55 is an important number below the 50-period moving average. In other words, it's the next number down below the 50-period moving average on the daily chart of importance, 112.55 sticky note material. Meta in a different position on the chart below the 20, 50, and 100-day moving average, challenging this pivot low right here. If they were to give up this pivot low, 439.20 is a next major number of importance on this daily chart. Doesn't mean they have to get there. It means if they do get there, I would expect an intraday bull-bear battle at a bare minimum. Tesla's a little sloppy up here. We could say this is a reversal candle. Why? Because it was on heavy volume, new high, finished on the lows. Here's your retracement. They can't make a new high yet. They can still come down, but they are above all the moving averages. So you keep in mind the trend is your friend. Can you trade Tesla against the high? Can you be short against the high if a trader wanted to do that? Very similar to the IWM. You could, with the full and complete understanding, if they made a new high, closed the day above that high, that trade would be wrong. See on the weekly chart how it's very similar? You have a tail candle. You have a sign and or signal of a trend change. I'm not going to say it's the ideal on-time situation, but you have what you have. Take it at face value against the high, meaning against this high here, the trade is wrong. If I told you how much I appreciate each and every one of you, without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.